With Trump in office, the last few months have been pretty wild. We have seen tariff retaliation, the stock market tumbling into potential correction territory, and of course, talks of inflation, and yes, a potential recession. People are scared, people are confused, they don't know what to believe, and there's so much uncertainty. And with the new Trump administration in office, the question we keep getting when it comes to people's finances is, what should I be doing with my money to keep it safe? Now, safe is a relative term. Your definition of safe could be very different than my definition of safe. And your investment choice is going to depend on a few factors. Number one, your age, because the older you are, the less risk you should be taking on your money. Number two is going to be your risk tolerance. How comfortable are you with risk on your money, with losing money? And number three is going to just simply be the goals you have for your money. Because if your goal is to touch your money sooner, you need it in accounts that are a little bit more liquid. And if you're okay with letting it sit and grow a little bit longer, you have got a few more options. But if you really are looking for somewhere to save your money where it can be safe and protected, and you won't have to worry about stock market volatility or what side of the bed Trump decides to wake up on that day based on his mood, there are two accounts that I can share with you that will give you peace of mind. I have been in the financial services industry for 9+ years as of the date this video is being produced. I have helped over 700 clients with just these two accounts alone, and we've weathered multiple financial crises together. Most recently, March of 2020, which was COVID, and again in 2022. And guess what? None of my clients lost any money inside of these two accounts during that time. And that is because these accounts involve something called the indexed strategy. This is a strategy where your money will grow when the market does well, but when the market doesn't, you don't lose any money. And that's because your account is actually mirroring the stock market. Your money is not invested inside of it. And this strategy is only offered by insurance companies. That sounds too good to be true. How does that work? Friends, it's not too good to be true. It's just too good to be free. There's always a way the company that has your money is going to make a profit. It could be through a spread, meaning they take a piece of your profit. It could be through a cap, meaning you can't earn over a certain percent, or it could simply just be through a fee where they're going to charge you, let's just say maybe 1% per year to have those guarantees, but in exchange for unlimited upside growth. But either way, you basically give up a little bit of your growth in exchange for zero risk. And many times when you actually average out the performance of an index strategy compared to the actual stock market, the index strategy actually averages far better just because of the fact that you don't have to worry about losing money. Now, there are two accounts that offer the index strategy, and the account that's best for you will really depend on what type of money you're looking at moving into it. If you are currently actively saving money either for your future or maybe for your retirement, you might want to take a look at a product called an IUL, what we also call an Indexed Universal Life. This is basically a permanent life insurance policy. What? Life insurance? Yes, it is life insurance. And it's very unique because permanent life insurance policies have this cash value feature that grows behind the life insurance. So basically, every dollar that you contribute into your IUL in excess of what it costs to own it will spill over into this cash value bucket that grows indexed to the stock market. So you don't have to worry about losing money, and it grows accessible to you in the future at any time, at any age, without paying any penalty, and it's accessible all tax-free. Now, the downside to an IUL is you have to get approved. The insurance companies will look into your age, your health history, and your criminal background. So as long as you aren't deemed too risky or unsafe for the insurance company to insure, you will get offered an opportunity to take access to one of these policies once you submit an application. Now, what if you already have money saved in accounts like 401ks, IRAs, or any other traditional retirement account, and you just want to protect and preserve it and put it somewhere where you don't have to worry about losing anything? Then I would be taking a look at what's called an FIA, a fixed indexed annuity. FIAs basically put this wrapper of protection around your money and basically give it access to the index strategy where you don't have to worry about losing anything and that account will just grow. They are on contract, so you'll be in anywhere from 5, 7, 10 years or so. Think of them kind of like a bank CD, but on steroids. Your money will actually have a chance to grow and earn really great interest. And some of them are completely fee-free. Some of them also come with the opportunity to pensionize this account when you retire and start to collect out a guaranteed pension payout. Yes, really, truly a pension payout income for as long as you live. So you never have to worry about running out of money when you get into retirement. Now, the caveat to this is the money that you put into these accounts has to be coming from either a former employer that you're no longer currently employed by, or from an individual retirement account like an IRA, or even just from your bank account. It's usually highly unlikely that you'll be able to move money with your current employer, especially if you're under the age of 59 and a half. If you're over 59 and a half, there might be the potential that they offer something called in-service distributions where you can roll money while you're still employed. But typically you're looking at money from previous employers or money that is not connected to any employer in any way, shape, or form in order to get access to these types of products. Remember, folks, safe doesn't mean stagnant. With the right strategies, you can protect your money and still grow it even during uncertain times. I just recommend you always do your own research because, again, this video is not meant to be taken as investment advice. But if you are looking for more information on IULs and FIAs, I've linked 2 videos here that can give you a little bit more about how they work in more detail. And as always, if you like this video, make sure you subscribe so you do not miss another piece of valuable content sharing with you tips on what to do with your money. Catch you back here next week on YouTube.